So you tell me, right? Down 300, up 300. Did your friend Jay Powell mess this up yesterday in the message? Former Philly Fed President Plosser says he, quote, muddled his message. What do you say?
Look, I always think, having sat at that table for 10 years, I always think of Mickey Mantle's great quote when he finished playing baseball, went up to the broadcast booth, saying, I didn't realize how easy it was to play the game until I got into the broadcast booth. Unless you've been a participant, and Charlie Plosser was, I was, I think we're a little bit too harshly critical here. We're trying to parse every single word and gesture. The economy's doing fine, as was just mentioned. And the Fed is not driving a yield curve here. Look at how rates have come down, even as they were paring off their balance sheet. And if you look at the 10-year, it's below 2% today. Why do you think that is? It's because we're an attractive place to be. These rates are very attractive to underpin equity markets. And the short-term rate cut, I think they just gave back what they imposed in December. I would have probably dissented. I would have sided with Eric Rosengren of Boston and with Kansas City. And I think it shows you a couple things. It's a very important thing that we had two dissents. One is that there is no true consensus, or at least a majority opinion is there, but not unanimity on where the economy is. Those two argue the economy is in good shape. They're very good thought leaders. Particularly Rosengren is one of the great thought leaders that the committee always has been and continues to be. Those are important statements. And there's another aspect to the benefit of their having dissented, which it sends a signal to the President of the United States. This is an independent body. He has no control over the bank presidents. He doesn't nominate them. The Senate doesn't confirm them. And they're truly independent thinkers. So I think there are real benefits there. Well, one of the things I find very interesting, by the way, it wasn't long ago on this show, people were talking about 50 basis points. Mm-hmm. And now it's as though they've got amnesia on those points. And the second was because other central banks are ratcheting down more negative interest rate policy making, what I consider Pyrrhic, self-defeating monetary policy that the Fed should follow. Well, and I'm reminded whenever I hear that, every time I try to do something stupid that my brother Bobby did when we were little boys, my mother would always say, look, if Bobby put his hand in the toaster, would you? The answer was no. There's no reason that the Fed needs to pursue the same policy of constantly cutting like the ECB and the Bank of Japan. So I'm not as critical of Powell here. He may have muddled the message. One of the problems, by the way, is they're doing a press conference after every single meeting.
Yeah, his choice.
And that is a tough thing to do time after time after time. Mario Draghi was exceptionally good at it, exceptionally good at explaining what I consider to be terrible monetary policy. So let's give Powell a break here. And your 300 up, 300 down just indicates to me, I hate to offend the members of the investment committee, what are markets, particularly stock? They're manic depressive mechanisms. I operated a hedge fund that did really well for 10 years, but we knew that there would always be trading opportunities, and that's the nature of markets.
Right, but communication is a key part of what Jay Powell does. You went to the Mickey Mantle thing.
I didn't think he did that badly yesterday. I really didn't.
Yesterday's not the only example that I was going to use. What happened in December? You use Mickey Mantle as your thing. Well, I'll go. Some people are taking what he's done recently, like Yogi Berra. When you go to the fork, take it. Well, what does that mean?
Yeah. Look, it's so easy to criticize the central bank, particularly people that have never been a central banker. You cut them some slack. The point is, it's policy. And policy is geared to the real economy, not to financial markets. I know we all like to think that they're going to do what we market operators or you market operators want. That's not the way it works. It's to get the real economy correct, not to have inflation or deflation, keep employment at its maximum or optimal level. That's the purpose of the Federal Reserve. That's the central bank. And the markets need to adjust around it. One of the points made earlier by your panel is a good one. And that is the economy continues to do well, the markets will do well.
Well, Powell said yesterday that the economy is doing well. That wasn't even why they made their move. It's more of an insurance thing. But then you tell me. You say it's about the policy. What is mid-cycle adjustment? What does that mean to you?
I actually think it's an encouraging statement. If we're mid-cycle, that means we have further upside to growth. It may not be as robust as it has been. It means that we're, I don't necessarily agree with this, in the middle of an economic cycle. I think we're closer to an end of a cycle, but we're not on the eve of a recession. And I think that's what mid-cycle means. I thought it was an encouraging sign. It means that we have further run rate on economic growth.
What do you make?
Look at personal spending in June. It was up 4.1%. Consumption drives our economy. And then again, look at these rates. I can't think of a single business, maybe the panel can, small, large, public, private, that feels that they are under financial duress and that markets are not helping them and that credit's not available.